Let's get back into it. Digging for dollars, April 14th. What's the biggest news of the week? Amex Exploration releases their much-awaited FS for the development of their Perron gold mine. It was a banger.
It's huge.
It's
It was awesome. It was
probably
so great.
the best
So
project out there, the best gold
that's
project
all we're
out
going to
there.
talk about. That's what we're talking about today.
So
Victor,
I wanna say some numbers here. What stood out to me the most? I'm gonna start with the payback. Half a year. That's easy. I think your uncle could give a loan for the initial capex of this project, 194 million, producing 147,000 ounces a year over 5 years. But the big number is the after tax NPV of 1.13 billion at $3,500 gold.
So 5% discount rate, right?
5%.
5% discount rate, 1.13 billion. And then what's it at spot?
I don't have the number at spot.
1.7 billion at $4,700 gold, 150% IRR. Here's what really speaks to me though. Here's what I think is a really big thing. 5-month payback at spot, 6-month at $3,500 gold, a $910 all-in sustaining cost to produce 150,000 ounces a year for 5 years, 200 million capex. And I think that for those listening, there's a big difference. We've been harping on developer discounts, right? Like finding NAV discounts to big NAV numbers. This is a feasibility study. The amount of engineering and contract bids and the amount of work that goes into this is so much greater and so much more accurate than the PEA. When we said a long time ago, PEAs are what, plus or minus 50%, if that, in terms of accuracy, feasibilities are pretty on it. You have a hard time modeling inflation, but this is a now thing. This is something you can build right now with a half-year payback. Debt financiers will love it. And Amex has a 700 million market cap today. They'll have 1 million ounces left over, let alone everything else they're going to discover from underground. So 700 million market cap and this wonderful NAV and a project they can actually do, right? I think that there's this ratio they put in that I think people don't often look at, which is this capex, this NAV to capex ratio. So the ratio of net asset value to the capex, which just basically shows you like it's kind of just highlighting payback period of some sort, really. But I think that it's like 8 at spot or 5 at 3,500, and the higher that ratio is, generally the more doable the project is, the more financeable, the more fast tracked it can be. And this just checks all boxes. I love this. Yeah. Amazing thing.
So because of the margin of strong margins, because of the higher grades, obviously $3,500 gold, you get an NPV5 of 1.1 billion, jumps up to almost double that at spot 4,000 if you look at their sensitivity analysis. Toll milling agreement, so you get to build, you avoid a lot of that initial infrastructure that that can cause a lot of trouble in terms of costs, because we always see costs skyrocket if you look at the previous any other previous project that has been developed in Canada. And so you're dealing with a lot of buffer when it comes to a project like this, and it's probably best in class. As I mentioned before, the grades are almost twice as much as any other project out there. If you want to look at comparables, if you're into that, if you want to look at what else is out there. Fast payback, capital returned almost immediately, minimal dilution. It's probably all debt financing. Like if you have a company like Amex, do you want to go out there and look at other developers, or do you just pile into something that's so de-risked and that there's still a lot of upside?
It's still a hard one though, because it's still venture. So the only drawback will be a 5-year mine life, right? So mines are holes in the ground. They're complicated. They go wrong. So the only thing that anyone could say really that's a negative is the scale isn't there, right? Like you have a 5-year mine life, all the gold, they have this 1 million ounces that'll be left over, and undoubtedly they're going to discover more. But, I think that the question will be now, what do they do with it, right? Like, you could build a mid-tier with this, right? You're going to have $500 million a year of cash flow. So do you buy into this long-term where they're doing this themselves and they build it? And that's very cool, right? And they can start building new things and build this out, or is it something that gets bought really quickly because of that? So I think that you still have you're still playing the game, right? I wouldn't pile all in. Like, what does this do for other things in your opinion? Radisson, West Haven, Newfound Gold is the first thing that comes to mind, right? Like, does this maybe highlight a different way to go about things? Like, do you mine just a higher grade? Like, what it just shows you the profitability of grade in Canada, and like it's a real business. It's like, yeah, build the mine, right?
I think what you mentioned before in terms of the MPV to CapEx ratio, I think that's really important. Radisson, operating in the Abitibi as well, and are able to take advantage of the infrastructure in the area and, use toll milling agreements to mitigate a lot of that initial CapEx. Grade, and you look at the CapEx secondary. I think that's an important filter because there's a lot of development stories out there, but once you dig in a little bit, you realize that the grade isn't as good, and they have to spend $1 billion to get it up and running. That's a lot of risk.
Yeah, it's a lot of risk because it's like they can't build it themselves. Like, there's a book I used to read um, that would always harp on any small business. Things why small businesses fail. It's books from the 90s. And it was like every small business has to be built so it can operate on its own, and then it will be bought. We don't usually go through that in mining because we rely on others to buy things, right? But the projects that you can build themselves yourself, those are the ones that have to be bought, right? You see Foran get bought for this huge multiple by Eldorado because they were about to be into production, right? I think that we overlook sometimes the doability of a project for a junior miner, right? So you get some of these things that just get lost in cycles, right? That take too long because you can't do it yourself. So there's obviously exceptions like the Filos of the world where it's just so big, so great that it has to be bought. But I think that interesting time right now. It just resets the market, and not a lot out there like that. We own a bunch of Amex, not selling it, hanging on. I think that it's I'm interested to see how Victor takes this and what they end up doing with it.
Okay, great take, great results from one of our portfolio companies. Let's move on to our guest segment for this week. Tony Reda, the founder, president, CEO of and director of Tectonic Metals. Prior to that, he was the VP Corp Dev at Kaminak, where he was pivotal in raising all of the capital to progress their story from greenfields all the way up to acquisition. Tony,
thank you very much for joining us here on Digging for Dollars. 23 meters of 16 grams, 21 of 4, 13 of 9, 24 of 13, some very long number of 0.5, heap leachable, talk of the next snow line, Alaska, and you just raised like $100 million after the first year of drilling. A, teach me. B, what is it that makes this project so special?
Teach you. Oh my gosh, that's very humbling. What makes this project so special? I would say that well, there's so many things that I can. Where do I begin? It is it has the potential for multiple deposits. So it's some people use the term district scale, use camp scale. What exactly does that mean? Well, multiple deposits, multiple open pits. It has that sort of potential. It's also next to one of the largest, if not the largest, undeveloped gold deposit in the world right now. That is currently sitting at just shy of 40 million ounces of gold. We know this mineral belt has the potential to produce that type of scale. The other thing that makes this project super special is that it's the third richest placer mining jurisdiction in all of Alaska. So recorded placer gold production, 1.4 million ounces. What does that mean? Well, we have proven gold endowment, and these intrusions or potential deposits, each stream and creek around them has produced gold, and that gold is coming from that hill, if you will. And so that's another marker that makes this project very unique. Well, I can keep going, but one more thing, 100% drill success rate. You don't see or hear that too often. We have 191 drill holes into one of the intrusion targets called Chicken Mountain, and every hole has hit gold. 3.3 kilometers of drilled strike, width is about 700 meters, depth down to 400 meters. So we have an unconstrained geological body or rock unit, an unconstrained meaning we've yet to define the limits. One of our goals, believe it or not, is actually to hit dead rock. You need to hit dead rock in order to define the geometry of the potential deposit.
Very cool. Well, we were very happy shareholders. I had coffee
Oh,
with Mark and Steven over at 3L. And I
yes.
remember it was when you guys did your a 50-cent deal, 80-cent deal, whatever the price was then. And they're like, you
Sure.
got to buy this. And Ira was, and I was like, great. And so it's been such a rush. And so just for our shareholders, from our listeners, right, who are just maybe a little bit new to the story. So what's the project that you're next to in Alaska? What is the 40 million ounces?
It's called Donlin, Donlin, and it's co-owned by Nova Gold and Paulson, i.e. John Paulson, the well-known New York billionaire.
And when you talk about this intrusion camp scale, one of the things I think that intrusion related systems, rig systems, it's become kind of a buzzword these days because you can have this consistency of mineralization throughout the ore body. Is it something that would be like for snow? So people follow Snowline for a long time. They've now seen how that's worked out. Is it something like that you're relating to Snowline? Is it something more heap leachable where it's more the Fort Knoxy kind of side of things? What is the kind of the comp there?
I guess it's like saying like you and I are brothers, if I could be so bold. We have the same last name, same sort of bloodline, but we're completely different humans or individuals. The granddaddy or the godfather of the reduced intrusion related gold model deposit is the Fort Knox deposit or the Fort Knox mine. And we're all kind of different flavors, if you will. And Snowline is part of that family. Our project, the Flat Gold Project, is part of that family. Now, it's I wouldn't say it's a direct analog, but we all have similarities. Ours, for example, is heap leachable. To my understanding, based on the public data on Snowline, they're not heap leachable, and so that's that's one of the differentiators. And there's a couple others. We are more akin to the Fort Knox mine. And for those that don't know, that mine has actually produced close to 10 million ounces of gold. And it's currently owned and operated by Kinross.
So what took you here? So you mentioned, I think that I remember the 1.5 million ounces of placer gold here. And yes. I remember the first story was like this big widespread area of basically just gold, and you guys were going to see what was going on underneath. So what was it that brought you guys there? Why were you able to get it when no one else was? Obviously something very special is going on here. So why was there some differentiation between and so recently, right? Like you just kind of moved into this area.
Yeah. I guess sometimes we have these very scientific project generation initiatives, and sometimes it's as simple as saying, I wonder if there's another 40 million ounce gold deposit in this mineral belt. And so that was my first sort of, I was curious and fascinated by Donlin. It is a refractory deposit, which means the gold is chemically bonded to the rock and it has different metallurgical needs and capital and operating requirements. But nonetheless, this very prolific deposit. So I went sniffing around in the same mineral belt. And what I learned very quickly was that our native partner, so Tectonic actually has our second largest shareholder, is an Alaska Native regional corporation. They also happen to be the largest private landowner in the state of Alaska, over 12.5 million acres of land they own. We've done 5 mineral agreements with them on 5 different projects, and this current project that we're talking about today being the latest one. So going back to, I was sniffing around in the mineral belt. I knew that my native partner had land in that belt, and that prompted me to initiate a conversation with them. And that literally during that conversation, the vice president of lands for the native corporation, I said to him I wanted to sign an NDA agreement on these parcels of land in that belt. And he said to me that the last person that was in there was that mining billionaire, eccentric gentleman that's well known in your space. And it took me a while, like a couple seconds, actually, not a while, but I was like, okay, who is that? I was running through the roster of mining billionaires. And it turns out, he goes to me, well, we finally nailed it down. It was Robert Friedland. And Robert Friedland started a company and financed a company called Fairbanks Gold. Ironically, Fairbanks Gold advanced the Fort Knox deposit towards production and then was acquired. So they were trying Fairbanks Gold actually moved into our project in 1985, signed an agreement with this native corporation, and drilled made the first ever discovery. And so they worked it from 1985 to 89. So that I got this opportunity predominantly because of my relationship with this native corporation. And then the markers, we always look for scale or a tier one opportunity. And the markers being, okay, you're 40 kilometers from one of the largest gold deposits in the world. You're in the third richest placer mining jurisdiction in all of Alaska. The bedrock to placer gold relationship on our property was uncanny. It actually has been studied in academia and worldwide. Then you have Robert Friedland, and anything Robert touches, you kind of want to take a look at. And then we had the drill data. So there was about 50 drill holes at that time that they executed, and then a junior back in 1997 to 2003. They did a little bit of drilling there, but at that point, every drill hole hit gold too. And so we got into the data, and I just couldn't believe my eyes that this thing exists. And this native corporation, the data wasn't in the public domain. So we were quite fortunate to lock up this property. And, it wasn't all roses right off the hop, right? We started doing our rudimentary desktop work, digitizing all the historical data, then surface work, and then we did our first drill program. And I don't want to say the sophisticated investor or the smart technical investor saw what we saw, and then it wasn't until last year where we started putting out these phenomenal drill results and demonstrating some serious scale vis-a-vis drilled strike that it started to really get the market's attention. And I would still believe that a lot of companies, or a lot of investors, I should say, probably don't even know our story that well. We're still kind of new on the scene.
Well, listening to your or your pitch here, district scale gold play in Alaska, could be the better looking fraternal twin of Snowline, in that you have the classic intrusion related system, but you're heap leachable, potential for multiple deposits on spread out over 100,000 acres of land, and great partners involved, and great history. What you said, you're hitting gold every time, so it sounds like $100 million in the bank. You just go out there and drill, work towards a resource, eh?
Yeah, well, yes. In short, there's enough. I'm going to say visibility. It's tangible. It's within reach. A multi-million ounce resource. And you mentioned Mark and Stephen from 3L, who have launched coverage on us, and they have their report, and you can pull that up and see. But they've already come out with a mineral resource estimate, a gold resource estimate. Just doing the geometry and crunching the numbers, yes. And then a lot of people can say potential deposits, but I wanted to highlight, when I say potential deposit, what gives me, like, one of our targets called Black Creek, we drilled 4.5 grams per ton gold over 40 plus meters. So that's one, and it's open in every which direction. There's also placer gold to the tune of a couple 100,000 ounces in the streams and creeks around that target. So these intrusions are like hills, or a plateau, if you will. And then so there's another marker. And then we have the geophysics, where every time we've drilled the geophysical intrusion anomalies, we've hit gold. So there's a lot of bona fide evidence to support that this actually can be a meaningful deposit. And that's 6 kilometers away from where we've been focused and raised most of our capital. Like, so it's in a, it's its own separate little entity that we have full access to.
When you drill and you hit on 100 and some odd holes, and there's gold and everything, and you have this large, string of pearls 20-kilometer system where you have multiple signs of different deposits, and you have almost $100 million in the bank, what is it that keeps you up at night as the CEO going into a program? What's the stress point? I think that we always forget sometimes that this is still venture capital, and still things go wrong. And so for you, when you look forward in this next couple of years, what is it that kind of you're like, this is the one thing we kind of got to prove out and make sure that this is something that people can kind of watch for as you go through the motions here?
Yeah. It's like, I'm gonna say, like let's just say on our Instagram or social media profiles, we always post the best stuff. We don't post the shitty stuff or the stuff that's not so good. So you get the highlight reel, and everything looks like a Cinderella. Like, oh my god, this is an amazing story. And whether it's Snowline or even Great Bear, they had it. Like everyone, where I'm going with this is that what keeps me up at night is that Mother Nature, her number one job is to make you look like you. She will humble you before you know it. So you never can go in there like, oh, we got this dialed in. There's always going to be a twist, a turn, a plot twist. It just always is the case. And how you adapt to that and pivot. So what keeps me up at night is that, CJ, you laid it out like, so, oh, you got to go drill this thing. Yes, in some ways that is true, but I'm very my reputation very seriously, and I understand that we're dealing with something below our feet, and you never have all the answers, and so what keeps me up at night is that I kind of just humble myself. It's not always going to be a slam dunk. There might be a twist in the metallurgy. Maybe we drill an area and it's cut off. It's still very much early days. So I don't, and there's not one specific thing other than knowing, even in our last company that we sold for 520 million, that there's going to be something that's going to, sort of, a punch in the face, if you will, and then you got to pivot and adapt. And I don't know what that is right now, because it has been, very successful. But I would say, the low grade that we hit, there's a ton of low grade in these systems, including Snowline. And when I say low grade, we're talking about 0.2, 0.3. We have that till the cows come home. And, back in the day being like, say, 2 years ago when gold was $2,000 or lower, that stuff wasn't as economic. And now, even the investor has to wrap their head around, 0.4, especially as a heap bleach, or 0.3, 0.5 at $4,000 gold, that can be economic. And so that's something that, there's a sea of low grade here. And, our job is to find the higher grade. And then in the end, you're dealing with your average grade or anything that's above cutoff that's going to make you capital. So, we have to keep our foot on the gas and really hone into that high grade. And, we didn't hit that high grade right off the hop, right? We hit some good grades, but now last year with more drilling, more geological data, more experience under our belts, we're getting better at understanding what's controlling the high grade.
Find that payback zone, quick payback, life of mine forever. Pretty fun project. When do you start drilling?
We're targeting May 1st, early May.
Awesome.
Five drill rigs. It's going to be a fun year.
That'll be a very fun year. Well, I think that's a good transition, Tony. That's exciting. May 1st, that's a couple of weeks. Transitioning here to see into a new segment that's Tectonic, TECT on the venture.
Yes.
Should be a very exciting summer. Dig this deal. Segment that's a lot of fun. You've been around for a little bit. You look at different things. Audience gets to hear what different industry executives and different experts in the space like to bring for other deals to pitch. The only rule here is that you cannot say the company's name and you have to say the market cap. Well, I guess that's two rules. You have to say the market cap. You can't say the company's name. Essentially a very elevated elevator pitch. So 30 seconds to a minute. And with three of us judge, dig this, ditch it, or more often than not, you dig into it. Siege.
Okay.
You want to kick this off?
I'll kick this off. So I'm venturing into a different metal. I think every deal that I've pitched so far has been gold, or the lion's share of it. So I'm going to try something new, and hopefully you guys dig it, or not. I haven't been on the best streak lately. Okay, so I am a $46 million U.S.-focused copper exploration story. My flagship project is right next to a major, a major multi-billion-dollar development owned by a $20 billion diversified mining and metals company. And so their project is arguably one of the most important CRD discoveries in the United States. And my company is using their deposit or project as a blueprint here. So a large high-grade CRD system with real economics, and they're banking that the system extends onto their ground or that there's a large copper source beneath it. And so geologically, they put out a hole late last year. They hit about 100 meters of polymetallic mineralization with high grades. Intercepts, highlights of the intercept include 84 meters of 0.09% copper, 0.4% lead, and 0.4% zinc. But within that interval, you have 10 and a half meters of 0.8% copper, 2.7% lead, 1.6% zinc, 253 grams per ton silver. They're currently awaiting assays from their latest phase 2 update. They drilled around 6,000 feet across 6 holes. 5 of these 6 holes hit visible copper sulfides like chalcopyrite and chalcocite, which confirms that they're in a mineralized system, even though assays are still pending. A little bit of hair is they don't have a lot of money. I imagine a financing is coming down the pipe soon. So you're not really buying into the resource or economics today. You're in it because you are a degenerate speculator like all of us in this space, and you are risking it for the biscuit, holla for the dollar.
Tony, I'm going to let you go first.
Hollow for the dollar. I've never heard that one. Wow.
Yeah, you can use that on the next marketing
Oh my
pitch.
God.
There.
I don't know if I can top that, but okay. So I would say that, okay, this company has a $160 million market
Whoa,
cap.
no, sorry. You got to dig it, ditch it, or dig in.
It's only a $46 million market cap. 46.
Yeah. You got to judge.
Dig it, ditch it, or dig more into it.
$46 million market cap.
Yeah.
Sorry, it was dig it, ditch it,
dig
or was
it, ditch it, or dig in.
Dig in being learn more.
Yeah.
Dig in.
Yeah, good cop out. Siege, I full ditch that because not even because of the deal, because that was a 3-minute elevator ride.
I'm
and
sorry.
I still don't even know what's going on with that project. Full ditch, nonstop.
Oh, no.
I'm out.
Okay. All right. So sorry, Barksdale. They're right next to South 32's.
Could be the best company in the whole
Taylor
world.
deposit.
Doesn't even matter.
Yeah.
I'm ditching that.
Okay, I'm
Ditch
sorry.
that pitch.
Well, okay, I apologize. I've had to apologize to another company, so this may be this may be my second one. I'm sorry. It was probably a disservice. I tried to add a little bit of pizzazz to the end of it. Not sure how it came out, but the upside. We're in it for the asymmetric upside, guys.
All right, Tony, you want to take this? We got to turn this around here. Dig this
Okay,
deal.
I'll give you 30 seconds, so this will be quick and easy.
Great.
All right. Proven silver exploration resource development company in Mexico, $160 million market capitalization. What makes this company unique is that they can offer exploration. So there's discovery potential. Let me just put it, they have 4 assets. 3 of them have mineral resource estimates, and the total ounces in the ground, if you were to add them all up, which is not NI 43-101 compliant, it's in excess of 400 million ounces of silver. So you're going to get exposure to silver if you believe in the commodity price going higher. They have over 25 million in cash. They are taking one of those resource stage projects and going to be publishing their first maiden preliminary economic assessment. So you can use that PEA as a lever for share price appreciation, but also for a valuation metric. And that's only on one asset. The other asset they have a resource on, but it's a district or a camp scale, similar to what I communicated about Tectonic. And they are drilling 40,000 meters this year. And they're focused on flushing out the high grade that they've already encountered and then testing some new targets that have never been drilled before. So you're going to get that sizzle from a potential new discovery hole. You're going to get a growing resource on a high grade deposit that already exists. And then you're going to get exposure to a PEA on a completely separate project in a different area of Mexico. They have probably suffered a bit from, the, silver price coming down a bit, but also, some of the stuff that in other parts of, the I don't want to try to be politically, just some companies have been suffered with politics and, cartel and things of that nature. And this area is not subject to that or exposed to that. So they've been, I think, a little bit beaten up for it. So there's an opportunity there for a re-rating just on, if you believe in the country and the jurisdiction and the area that.
So they were throwing the baby out with the bathwater.
Sorry?
With that, throwing the baby out with the bathwater, even though they are in the safer part of Mexico. What was the market cap on that?
It's about 150 million. 160
So
million.
unlike Matt, where I base my decision on the data and not the length of the pitch, right? I will dig it.
Yeah, I think I dig it too. I'd like to dig in. I think I'm right between the two. I'd love to understand the four. That's cool. Yeah, definitely.
They're one of the few companies that can offer that many ounces in the ground. So there's a good silver price to beta share price where you can see silver price. There's a correlation there. So
what's the company? We both dig.
Yeah, it's called Kootenay Silver.
Kootenay.
Oh, Kootenay.
Yeah. Oh man, Kootenay's been around. The funny thing, I keep buying and selling that. I bought and sold that thing for, I swear, 10 years.
There's a lot of.
I don't understand why it never works. Why does it never work? It never keeps going up. I don't understand. It starts going up and then it stops forever.
Because they had the option. Who had the option on their projects a while ago in the last one, and that was dropped.
It's totally, the assets are always good. I don't understand. Good one.
Yeah. No, that's the thing is, I think with a lot of juniors, especially, we're, obviously we're in a different, the market, I don't know if you want to call it a bull market, but we're in a, rewind a couple of years back, or even 3, 4, 5 years back. But we're always like, what takes the wind out of the sails sometimes is financings, market shift focus, and it just you start retreating back. And, it just feels like they've been like many other juniors. It goes up, it goes up, it goes down. But now lately they've been doing one financing here. The next one was at a higher price, and there is a bit of, they've gone up, and now they've retracted a bit, a little bit of consolidation. Also, everyone's in the money, so to speak. And then, when the market corrects, typically you sell your winners, not your losers, which is the wrong thing to do. But I think they faced a bit of that, and now they're in a sort of the foundation set at a new floor, and I think it can, with these good ones intact, and again, providing that Mexico stays stable, silver price stays stable, which I believe it will, and it will go up actually higher. And then you have Joe results as a catalyst, and then you have a PEA, which will change the scope of this project called La Cigarra. And I believe no one's talked about that asset, and now the PEA I think will surprise a lot of people, and hopefully there'll be a development opportunity there as well.
All right, redig. I'll go check that out again. All right,
redig. New one.
All right, we're gonna shift our way here. I have 240 million shares out in a market cap fully diluted of 230 with about 70 million in cash. Pan American owns 19.9. I'm sandwiched in Timmins between Porcupine, which is Discovery Silver, McEwen Mining, and Pan American, which has capacity in its mill. I have a giant land package where I've released a PEA on 950,000 ounces that say that at $4,000 gold, I have a NAV of $1.5 billion, and my market cap today is $230 million. Despite this PEA only having 950,000 ounces, I likely have another 2 million ounces at 3 grams, and I've only explored 8% of my property, which is gargantuan right in Timmins, beside all these mills with capacity. I only have 8 people on my team, and I've started this in 2019. I've done a lot without a very complex geology team, but this year I will have a resource upgrade, a bulk sample, which looks to net me $30 million in cash at least. And again, I backstop on $1.5 billion NAV and a $200 million market cap with 70 million to draw on. PEA, bulk sample coming, resource upgrade, 200 million cap in Timmins.
200 million market cap? I have two companies. I think
fully diluted cap, fully diluted market cap, with all these convertibles. I have a convertible security, a line of credit out there for 40 million, which is a convert with Pan American, which is the hair on the deal and the goodness, which is 19.9 Pan American and the line of credit, and their mill is next door.
What's the rub? something doesn't jive here. There's got to be a rub.
That sounds like a dig, Tony.
It
That
does.
sounds like I dig this deal.
It sounds like a big dig. I'm digging. I'm digging. What
I
was
dig
the
it because
market
we've
cap
been
undiluted?
The undiluted, so they got, I think, 150 million shares out, undiluted. Company is called Galleon Gold. I'm recently exposed to this deal, and I have bought it already. And I have no idea because it's in Timmins. It's like right in the middle. And it's going to be probably, I think they have 2 million ounce resource right now, indicated in for 2.5 grams. It's going to be 3 million ounces, 3 grams, 2.5 grams. The PEA is this huge number. They've barely explored. There's hits everywhere. I think the big rub on it probably is that Pan American owns 19.9, and they want to use their bulk sample, but also their ore for mill feed for their 5,500 ton per day mill that's next door that probably has 4,000 tons a day is the story. And the issue, I think, is that when you have a major that has such a big toehold, or mid-major, whatever we want to say, right? When one company has that toehold, then maybe what else happens? But I don't know. It seems.
But isn't that what
I'm very into it.
For Amex,
Pan American,
like,
so same people that own the debt and the same people that own.
Yeah. So what's?
Yeah.
It doesn't.
But that's similar to Amex Exploration, where
it looks
you have
great.
Eldorado.
I'll tell you, it looks really interesting. The guys at Cormark really like it. I met with them last week. This is a new one for me. I'm still digging into it myself, but that was one of those things that I popped on. I was like, I'm going to buy this, and then I'm going to keep digging into it. But cool story. It seems like
I dig it.
Yeah, I dig it.
I'll dig it for now.
Pull it up and look at it as well because I'm like, how did I miss this?
All right, there we go.
Actually, I take back I ditch it.
You ditch what? Don't be sour.
Yeah.
You're just jealous.
It was. And my reason is because you ditched my deal.
Yeah,
and that's the only reason why.
Tony, thank you so much for being here today. Good luck on the drill program this year. This was a lot of fun conversation. Yeah. Sure to be following along. 5 rigs, May 1st. Tectonic.
Let's do that.
We'll help you get the story out there, Tony.
Okay, I appreciate it. Thank you. It has been fun. It's great chatting, both of you.
Okay,
thanks,
thank
Tony.
you.
That was the most fun I've had ditching a story. And it has nothing to do with Barksdale. I'm sorry, Barksdale. I don't even understand your story just because of that.
Because it was so long and you spaced out.
Storytelling, guys. Venture is storytelling.
So you just hit the snooze button, or you snooze after a minute?
I didn't really understand.
It's the simplest story out there. You have a $2 billion project, literally right next to it. You're drilling, and you're already getting sniffs. I would be so bold to say it does extend onto their project, man.
It could. It could be the best story of all time. I'll have to look at it. I sort of ditched it still, though. All right.
I would advise everyone
that was fun.
To dig
that
more
was good. All right, we're going to do something new here. We're going to add at the end here. We're going to add quick hits.
All right.
Okay? We're going to try and rapid fire a few things that happened last week. I think that's fun. First and foremost, start with Denny. Pirate Gold hits 3 meters, 65 grams, 300 grams around it. Still not into the thick, but Denny and Greg are pumped and definitely not new. Good, bad, in light of Amex.
What do you mean in light of Amex?
Well, Amex, seeing the high grade and what can result in that, like you don't need too much. Like, do we think that this has a positive? Like, do we feel this has similarities or no?
I just think
too early.
It is early, but grade is king. I think we're seeing.
My gold, 8 million ounces at 1.75 grams, $1.5 billion market cap. Lots of people on the street saying $650 in US per ounce because of the G2 takeover makes them 5x from here. Do we think it's the same or not?
I think it is a legit acquisition target now. I think, Derek is killing it over there. I feel
like that premium though that G Mining paid for G2 is not the same thing just because the synergy of those two projects were so high. But my biggest regret, I didn't buy it at 3 cents when I first saw it 4 years ago.
I feel like
poor choice.
I feel like the premium was also there because there is a premium to G Mining stock as well.
That's right. I agree with that.
Because the currency was, somewhat, some people may say overvalued, and that's the best time for a company to use their paper as currency.
They did a good job. Cool project. Osisko Metals, 2 billion tons at 2.27 copper, 1.5 to 1 strip ratio, market cap $1.2 billion. Cheaper, expensive. The biggest mine in Canada would be what they are producing.
just makes me appreciate Sterling Metals that much more.
Attaboy. Good plug. Miata Metals, 23 meters, 6 grams. These guys are actually starting to figure things out. Good rock everywhere. I think that's just more of a FYI. Jungle of Suriname, always difficult, but one of those could be the next founders. ECU, this Element 29 story, 1,500 meters of 0.55 copper, $35 million deal. Big copper projects, Copper Giant, and Andina. What feelings on copper projects in South America, like these big giant things? How do you feel about them?
I think there has been some news of where copper projects in some of these jurisdictions have been shelved now just because of some political strife. I think, if you're hunting elephants, you are going to go down there. Larger companies are going to make things work. However, I think it stresses the importance of finding copper, like big copper projects in friendlier jurisdictions. And that's why I like Sterling Metals.
I like this Element 29. I like the rocks there, but I appreciate the plug again. Kelly, our buddy Kelly, pushing ahead at Borealis with Sandman, a whole bunch of engineering things in his press release. I want to highlight in that PEA again, that NAV to CapEx ratio. So 60 million CapEx for Sandman with a 700 million NAV at 4,000 gold or whatever that was, something like that. So that ratio, the doability of that project, Kelly, I think 180 million with 30 million of cash. Doability projects, I really like that. And finally, quick comment.
Sorry, let me touch on BOGO. Like, if you look at the IRR of that project,
200%
plus, right?
Yeah.
And it also shows you that grade is like, you can't take grade for what it like. Grade matters in different jurisdictions, and so you can argue that while his grade is, sub 1 gram per ton in Nevada, it's actually a higher grade project. Do you agree with that? Or no? You just take it as an absolute value.
I do, because the simplicity of it's the strip of it. Strip ratio is very overlooked. The strip ratio means for every ton of rock that has value, there is a ton of rock that has no value, right? So if you have a strip of 5-1, reverse that ratio. So I have a bunch of garbage that I have to get rid of to get that 1 ton of ore. So a 1-to-1 strip with okay grade, in a lot of cases, is better than a 5-to-1 strip with good grade. Because if you're doing an open pit, if you're mining it that way, right? Because you're not selectively mining. So a lot of things go into that statement. So let's take it with a grain of salt. But I think that project, it seems to work, right? And I'm happy to hear that he's going to go drill that thing. I think that's going to be a fun thing to follow. Finally, lots of drama this last week. Touch on it quickly. Denarius trying to buy Emirata after Emirata has been accused of a whole bunch of things, basically just spinning out lithium ionic. I wish everyone the best there, hopefully everything works out. A lot of drama. Be interesting to find a follow. I would just say that there's going to be a lot of ripples through the space. A lot of people here and a lot of deals that are all good. Some of them are good, some of them are bad, but maybe there's opportunity when things sell off too fast. That's all I'll say about things like this. You never really know until everything kind of gets pushed out, but there's definitely already, I've chatted to many people or different companies have different people on the board, and you're just seeing a ripple effect kind of go through the space. So interesting thing to follow as we push ahead here.
Yeah. And, Amex is one of the most followed companies on CEO.CA. They've done an incredible job in garnering that retail base. And so when you have that kind of base, you are going to see volatility. Is this, a buying opportunity? Are you the contrarian that is going to take this opportunity to pile in, or no?
If they are being investigated for spinning something out and then taking it, how does that affect their assets in Spain? No idea. Don't own it. No skin in the game. No horse in the race. Whatever metaphor you want to use. Yeah, but that's the only thing I saw. I was like, I don't understand. Who cares if it? I don't understand how that affects the asset base in Emirata.
It would be a company if you pitched it. I would be digging more into it.
Digging into it for sure.
Yeah.
That was a lot of fun. Good week. Look forward to next week.
Okay. Talk to you next week. Thanks, Matt.
Thanks, everyone.